Welcome to our daily Forex market analysis, and this is for trading on May the 5th, 2021. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So in terms of what's coming up here on May 5th. Actually, before we get into that, just a quick thing. Now, there were comments from Yellen, and essentially she said the Fed may have to raise rates prior to sooner rather than later, basically into next year. And this is what we were talking about, concerns in regards to inflation and prices going up too much, creating bubble in different asset classes. So now then she did sort of backtrack and said that there was no inflation concerns, but the whole thing about increasing rates, that is a negative thing. And this is why we have seen the stock market take a tumble. Anytime there's a talk of interest rates tightening, that is positive for the currency and it's negative for the stock market. And that's part of the reason we have seen the stock market drop. So just keep that in mind as we are trading on Wednesday here. So in terms of the news here, we do have PMI numbers actually first. We have PMI numbers out of the Eurozone here, and PMI numbers are precursors to our retail numbers. So if the PMI numbers, purchasing managers index numbers, so if the managers are purchasing stuff, that's a positive sign because they have confidence that they'll be able to sell the products, which means the retail sales will be higher. And that's why we pay attention to the PMI numbers. Anything positive here is likely to push euro up. Now, we also have euro economic forecasts. So with the surge in coronavirus numbers, if the economic forecast is not that great, that will have a negative impact on euro. So just something to watch out for. We also have ADP non-farm employment numbers, and these are again front runners for our non-farm payroll numbers, which will come out on Friday. So if these numbers are not good, then we could see a negative impact on US dollar. And also we have PMI numbers for the US. And then also services PMI numbers here. And other than that, we have crude oil inventories here with the oil prices. So if there's a drawdown in inventories, that will be a positive thing for oil and Canadian dollar. So just bear that in mind. And then we also have a couple of Fed members talking here. So any sort of further comments in regards to tightening of monetary policy will be positive for the US and negative for the stock market. All right, so let's go on to our charts here. We'll start off with euro dollar. So we had talked about yesterday how this was a pullback, and as we can see, we got that. So there was that decline, price wasn't able to go through. So now we're looking for a continuation move here. So we had a nice drop, a pullback, and now looking for a continuation move into 1.1950. So bias here is bearish. Only thing to bear in mind is we are right into the support level. This is where price had pulled back into before it continued higher. So we need to see a drop here. So we may get something like this. We need to see a break and then a continuation move to the downside. So bias here is bearish. Slight caution though, because we are into important support resistance level, but bearish bias here for euro dollar. Pound dollar here, this one is still stuck in a range. We did see the pound drop, but it has pulled back since then. There's still bearishness in it. So I'm looking for price to come back towards the bottom of this range. So this has been range bound here for a number of days here. And target here is 1.3785. So bearish bias here for pound dollar within the range. Aussie here, Aussie also declined. So in this case, we are into support level here. So we need to watch out. We have to be careful, but bias is bearish here. Now we do need to see a break because last time price was here, it bounced up. So we need to see a break. Now I would be looking for a bit of a pullback here and then a drop. And if it holds here, then holds below 0.7685, then we're looking for a continuation lower here. Bias is bearish here for Aussie dollar. So first target 0.7620, second target 0.7585. New Zealand dollar, this one here as well, it held below 0.7220, and as a result we have seen that drop. Now also looking for a continuation lower here. So bearish bias for New Zealand dollar. Next target is 0.7100. And then below that, we are looking at 0.7050. So bearish bias here for New Zealand dollar. Dollar CAD here, price went through this resistance level here. It's back into, it almost did a retest of this support resistance level here. But right now, this is looking neutral. Price is still in a range here, even though it tried to get out of this range, it's back into this range here. So bias is neutral for this one. With this here, US dollar is strong as well as Canadian dollar. Both of these currencies are strong at the moment. So no real movement with this one. So neutral bias, I'm looking for a move between 1.2350 and 1.2265. So neutral bias here. If it breaks through the support here though, then I would be looking for a continuation move to the downside. So if it were to break like this, then we're looking for a pullback and a further drop. But until then, bias is sideways for now, so neutral bias. Let's take a look at our commodities, starting off with silver here. Silver looking a little bearish here. As we can see, price wasn't able to continue. It just got stuck into this previous support resistance level. And couldn't make it through. So in this case, looking for a bit of a pullback and then a potential. So we could see price pull back into 2685. So keep an eye on that, or into 2655-ish area here. So one of those levels are the ones to watch. And then if it holds below either one of these levels, then we're looking for a continuation to the downside. Right now, this is more of a neutral. We didn't get a nice solid bearish candle close, but if the stock market continues to drop tomorrow, then we're likely to see actually silver go down with this as well. So right now, neutral to slightly bearish bias here for silver. Gold here, gold did get rejected from the top of the range, and this one's looking bearish right now. So in this case, looking for a bit of a pullback and then a continuation towards the bottom of the range. So still looking range bound. Next target here is 1755. So bearish bias for gold. Oil here, oil looking nice and bullish here. So tomorrow, if the oil, if there's a drop in inventories, that will be a good thing for oil, which means we are taking out oil from whatever the inventory is. That's a positive thing for oil. And we are likely to see a further move higher here. So bullish bias, next target is 66.50 and then 67.80. Copper here, copper is right into the resistance level here. So looking for a further move higher, 4.55 is the next level. So it seems to be holding here. So we are looking for a break out of that range. It looks like it wants to push through. So looking for a continuation here. Bias is bullish. 4.55 is the target here. Now we do have to be cautious about the resistance because right into the resistance, so we have to wait for it to get to the other side before continuing on with that. But bias is bullish here. Bitcoin here, Bitcoin seems to be struggling here. We have a bearish candle close. Next target is 52,500, right into the support. And then if it continues, we are back into 50,400. Now with the stock market dropping, this is likely to drop as well. So keep an eye on the stock market. Any continuation is likely to result in continuation to the downside for this one here as well. So bearish bias for Bitcoin. S&P 500, we saw quite a drop here. Then price did pull back on that walking back of the comments. But watch out, we may see another drop here back into the support. So watch out for a move like that. So right now, neutral to bearish bias here. The large pen shows that the price could bounce back up. So watch out for that. But neutral to bearish bias here for S&P 500. NASDAQ here, quite a drop. Price was stuck in a range for a number of days here. And as we can see, price has gone through the support level and we got quite a drop. Now watch out for a pullback here. And then if it holds, we're looking for a continuation move to the downside here. So bearish bias for NASDAQ, a potential pullback into 13,600 or 13,620, and then looking for a further drop here. So something like this is what I'm looking for. So bias here is bearish for NASDAQ, and our target, first target is 13,400, and then below that we're looking at 13,300. So we may not get here tomorrow, but we'll keep an eye. So bearish bias here for NASDAQ. And then Dow Jones, sorry, not Dow Jones. Yeah, Dow Jones, sorry. Dow Jones are still trading in a range here. So we can see price went down all the way into the support level here, then has bounced off. And now this looks like a bullish pin bar, but the problem here is we are right into this resistance. So it could go into the resistance and come back down. So that's something we'll have to watch out for. Now, if it breaks, then I'm looking for a pullback and a continuation higher. So right now, neutral bias here for Dow Jones. Only when it breaks through the resistance, then we'll look for a continuation. Otherwise, looking for a range-bound move. And then our DAX here, this one dropped a fair bit as well. This was also stuck into this range here for a long time. Now we have seen the break. And then I'm looking for a bit of a pullback and then a further drop towards 14,750. So bias here is bearish. And then Nikkei here as well. Nikkei went in to test the high, but failed. And now looking for a drop back down towards bottom of this range, 68.50. So bearish bias for FTSE. And then we have Nikkei here. Nikkei also broke through this support level. So bearish bias here, looking for a continuation move lower towards 28,250. So bearish bias for Nikkei as well. So that's it for today. You guys have a wonderful trading day, and I'll be back again tomorrow. Bye for now.